Thank you, Chrissy. Ladies and gentlemen, I'll go straight into it. Lovely introduction and perfectly exactly what we're going to talk about today. Just a quick overview of the board. We've got three people on the Australian board. A good mix of commercial, technical, and accounting skills there. We have 550 million shares on issue. We're at 3 cents today, down from 3.4 yesterday, sadly. Around about 17 million market cap, and the important bit is we've got 936,000 ounces of gold resource at Lake Kerry, which is in Western Australia, at a very healthy 2.5 grams per tonne. So we're a gold explorer, we're an Australian listed gold explorer. Hope to be in production by the end of this year with a little twist of lithium to the story, but I'll talk mostly about the gold there today. Lake Kerry is in Western Australia. It's in the northeastern part of the eastern goldfields. You can see a picture here of our drilling early last year at Fortitude North. The lake there, as it's called Lake Kerry, but you can see it's fairly dry. It's an ephemeral lake system. This year is the first time I've seen it wet, and the last time it was actually wet was back in 2016, I believe. So basically it's a dry sort of lake. Our resources, you can see there, 936,000 ounces at 2.5. Nearly all of it is open pit type of material, and today I'll be talking largely about the Devon and the Fortitude projects. The regional setting there, you can see the picture on the right-hand side. That's it's a picture of the magnetics, and essentially where you've got the reds and the whites and the yellow, that is where there's a very strong signature. We've got about 450 square kilometres of tenement there, 936,000 ounces at 2.5. I'll say that again, nearly 1 million ounces in that resource. And we've got around about 94 kilometres of strike of the key structural trends there, and that's where a lot of the deposits and the prospects are located on that system there. What is Lake Kerry to us? We've got potentially 3 mines. We've got the Devon pit, and I'll talk about that very shortly. The Fortitude gold mine, which we did some trial mining back in 2018, shipped about 100,000 tonnes of that material to Sunrise Dam that you can see up, just up there, owned by Anglo Gold Ashanti. And we've got the Red October, which is a high-grade, narrow vein underground mine. The exploration potential, or the next cab off the rank in terms of resources, is Fortitude North, and that's located just here, and it's only about 6 kilometres north of the Fortitude gold mine. That's the resource outline there. As you can see, we've got 244,000 ounces at Red October, and Fortitude itself is just shy of 500,000 ounces. Devon is about 65,000 ounces, so it's only a small deposit, but it's terrific high grade. So a target at the moment for us to get into is to get the Devon project into production, generate some cash flow, and then start supporting an overall Lake Kerry development through Fortitude itself. Do some re-optimisation at Fortitude. The last studies we did there are probably a couple of years old, and then move into Fortitude North and start developing that resource and push it up well and truly over the 1 million ounce mark. A strategic roadmap. Basically, we're aiming to be fairly aggressive and start working on this year with the aim of being well and truly into production within 2 years, and then potentially even the Fortitude area into production within 2 to 3 years. So that there on the left-hand side is just a very, very quick snapshot of how we actually aim to do that. Devon pit. As I mentioned before, that's our key focus, get that into production this year. You can see an outline of some of the drilling there that we've recently completed. The most recent studies, which are probably a little bit dated and need just a touch-up in terms of cost structure and current gold price. Basically, at the moment, where we stand is that we are in negotiations for contract mining and sorting out a processing option for processing the ore from the Devon pit. That pit shape there in the blue there, you can see it's around about 700 metres long. about 100 metres wide, and it goes down to about 100 metres or so from surface. You can see there are multiple lodes within that system there. The important bit is the project should generate well and truly north of $30 million in about 12 months. So we're aiming to generate cash flow from that. We expect the last of the approvals process, the approvals to come through in the next month to 8 weeks. From there, we expect to be dewatering that pit around about July, with the first site works commencing in October and first ore supply coming out in December, and that should give us our first check. The Devon pit itself, in terms of some of the recent drilling, you can see here this picture on the right-hand side there. That western lode is what we're pointing to with regards to these intercepts. You can see there's some very healthy intercepts at relatively shallow depths. Same again in terms of the main lode, which is what has been mined in the past. A little bit of trial mining in 2015, 2016 by a company called GME Resources. They shipped about 160,000 odd tonnes down to Carosue Dam. Grade was around about 5.9 and recovered at 93%. Permitting, as I said, we're nearly there. All our applications have been lodged, and we expect to be on the ground there well and truly before the end of this year. The other project is Fortitude, which is an expanded version of the trial pits that we did. You can see those there in the picture. The optimisation that we did a couple of years ago, based on a $2,000 gold price optimisation and $2,400 sale price, produced about 132,000 ounces and generated a pit that's about 1 kilometre long, nearly 200 metres deep, 270 metres at its width, at its best. We expect that with some new numbers, some updated numbers, that could be well and truly north of 250,000 ounces mined from the pit. Fortitude North is a discovery made by Matsa. You can see here in the picture on that right-hand side. Now it's a black and white image of magnetics. You can see the clear magnetic trend that comes up from Fortitude all the way through to Fortitude North, so it's on the same system. It was discovered by Matsa and in 2017-18 through some air core drilling. There it is there in Landsat imagery. The important bit about the Fortitude North deposit or system is that it sits within a major regional dilation system, and that hosts Sunrise Dam, Wallaby out here, Fortitude, Fortitude North, Red October. It's a long-lived, multi-episodic gold-forming system, and you can see here with this picture, this jigsaw texture in there just demonstrates the type of mineralisation, essentially a big solid fluid build-up, big pressure build-up, and eventually the system shatters and gold is deposited. Fortitude North is 1.7 kilometres long anomaly, and at this stage it's open to the north and open to the south, and you can see some of those terrific grades and intercepts from last year's drilling. Now, out of the top 12 intercepts for that system, 7 of those were drilled last year in 2023. There's a cross-section of Fortitude North, and I want to draw your attention to one of the most important bits about it, is that blue shape is what we thought we had. And with the additional drilling, you can see here in the red zones the significant volume change, and that volume change equates to a volume change in gold. Now, our best intercept before drilling last year was 9.6 metres at 3.3, and now our best intercept is two intercepts, 14 at 3.4 grams, followed by 35 metres at 3 grams, and that is the deepest drilling in that entire system. So we have very, very high hopes for that project. We've got an EIS-supported drilling, which is an exploration initiatives scheme set up by the Western Australian Government, where they'll partly fund the drilling. So we've actually targeted an 800-metre hole down through a magnetic and also a seismic sort of signals, potentially good structures in there that hasn't been tested and is directly below the existing mineralisation that we know of. Red October, just a quick brief overview there. The resource remains open in terms of that lionfish lode there. You can see the blue shape with some colour schemes through it. It's open along strike and open at depth there as well, and some significant potential intersecting structures that require and actually demand some exploration drilling. Some recent corporate activity there. You can see here from this slide some mergers and acquisitions and purchases. The average transaction's been done at just shy of $94 an ounce. MATS's market cap at the moment of a little bit under $17 million means that our ounces are worth $17 on the market. You can see there that we're one of the lowest numbers on that entire listing there. What's really important for us is that we're the third highest grade out of that entire list in terms of the resource, and that demonstrates to us the significant undervalue of our $17 million market cap. Now, I wanted to talk largely about the gold, but I do want to briefly touch on our Thailand lithium story. And the important bit about this is that the Thailand government has given huge incentives to attract EV players to come and set up base in Thailand. Now, Thailand is already one of the top 10 car manufacturers in the world. So it makes a lot of sense for them to attract the EV section of that future industry. Along with that, they're targeting all the battery makers as well. And so for a lithium story in Thailand, that means that the end user is there and well and truly established. What's that mean for MATSA is that we're an explorer for lithium. We have demonstrated that there's lithium potential in Thailand. We don't know the volume yet because we haven't done any drilling, but potentially we're in a position to demonstrate significant resources in Thailand. So that's the upstream section of a potential lithium supply chain in Thailand, and we're in deep discussions with the government, the Prime Minister's office, the Mines Department, about how we can fast-track the system and ensure that we can get in there, do some drilling, prove up some resources, start mining lithium in Thailand, and support and supply their EV initiatives. Just there's a demonstration of a few different prospects that we've got. We've identified 7. There's only 6 there so far. These are drill-ready targets now. We're just going through the approvals process. We've got two tenements granted. We expect another 4 in the next 6 to 8 or 10 weeks, and then we'll be drilling those. I won't go too much into that. As I just mentioned, we've got a couple of tenements granted. We've got more to go, and we expect to be drilling probably in the next 10, 12 weeks or so, depending on rain activities, that sort of thing. I'll skip this one. Well, you can see here the granite belt that we've followed is all the way from the Phang Nga region, which is in the south near Phuket, all the way through up to Kanchanaburi, and we've got prospects along all that entire trend. Just some pretty pictures of that sort of stuff. We have the ability to get real-time lithium readings in terms of the instrument here. You can see this instrument. It's called a LIBS unit, and it gives us a reading of 3.8% lithium out of this mineral, this rock. And with that, I'll leave it at that. Thank you, ladies and gentlemen.
Thank you all for being here and sticking out for the full day. I'm really proud to be back again in Sydney. I do love this conference, and I'm going to give you the Alvo Minerals story. We're a critical minerals explorer in Brazil. We've been listed since 2021. It's a relatively new company on the market, and we've got a focus on copper, zinc, and rare earths. Brazil's a really big country. It's actually bigger than Australia. It makes junior companies that are exploring there, gives them a chance to get hold of some fantastic opportunities. The location of our main projects are right here in the centre of the country. So the capital city is Brasilia. We're about 6 hours north on perfect infrastructure. There's great highways, there's good power, there's great water. 80% of Brazil's electricity actually comes from hydroelectricity. So it's actually clean and relatively cheap. We've also had quite a lot of strong community relations with the projects, and part of that reason is we actually bought our initial project, which is the copper zinc project, from the government. This particular project is where I'm going to focus most of our attention today. Right next door, we picked up a project last year called Bluebush. It's an ionic clay rare earth project, and even towards the end of last year, we picked up another project down to the south here called Ipara, which is brand new, and we haven't done a lot of work there as yet, but watch this space because it could be quite exciting. I'm going to start with the corporate slide, and there's a reason for that. All junior companies require funding to move forward, and the typical raise that they do is at a discount with a placement using a broker. We've just completed a $4.2 million capital raising at a 25% premium to market. Not only that, it was unbrokered. So a lot of the brokers that fortunately are part of these conferences are out of a job because I went and found this money from a Brazilian company and got the direct investment from them. So as a result of that, a company called Or Investments out of Belo Horizonte, and Mauro Barros has joined the board. He's going to be a significant partner for Alvo going forward, along with the Or Investments team. And I think one of the really important parts of that deal that we've just done is that Mauro and his team at Or Investments, which are professional resources investors, have spent over 3 months doing detailed due diligence on Alvo. So not just on the technical side, but on the corporate entity, looking at ESG, looking at the social impact in our local community, and everything's come up positive for them to make the investment. We see them as a really significant partner going forward, and I think it takes one of the question marks about capital raising in the future off the table because we've got such a strong partner with Mauro and the Or Investments team. And one of the things I'm really proud about on this particular slide is that our share register is made up principally of professional resources investors. RCF, Lowell, Paragon, and Or Investments, of course, are now on there, and Strata as well. They're all focused in on the company as a junior and certainly on our projects, which we think are pretty exciting. So a little bit more about the projects. We are, as I mentioned, central part of Brazil. Our operations base is here in Palmeirópolis. This is our only office in the company. We don't have an office in Australia. We don't have another office in Rio or in Sao Paulo. We're only on site. When I go to Brazil, and I spend a significant amount of my time in country, probably 50% of my time, I spend most of it here on site. And the real advantage for us is that our rare earth project, which we put into the company middle of last year, is right next door to our operations base. So at our operations base, we've got a core facility, we've got accommodation, we've taken over an old hotel and reformed like 15 rooms, and that's where all of our geologists and technicians stay. But our core facility is also really worth noting. We can cut, we can do XRF sampling, we've built our own ovens to dry samples, so we did a lot of sample preparation as well on site. And it's a bit of a theme with us because in Brazil, you often have to pay a lot for contractors to come in and do your drilling or your geophysics, and we figured out that once we actually liked a technique, we went and bought that equipment. So I'm going to talk to you a bit about that in a minute. But about the projects, so the original project that we had in the company was this area here, which is in the lime green. It's a VMS style, copper zinc. The VMS means it's massive sulfides. So when you drill it, you're getting high grades of copper and zinc in the drill core. We've got an existing resource on that project, C1 and C3 here. I'm not going to talk about those today. We've got a resource here which is based upon historical work only so far, so 4.6 million tonnes at about 2.5% copper equivalent. So decent grade, modest size. We did, over the last 18 months, we did a 22,000 metre diamond drilling program that has, well, once we update the resource, we'll expand and upgrade that resource. We made a recent discovery down here at C4, which was the middle of last year, We found mineralisation of high-grade zinc and copper as well in a stacked lode. I'm not even going to talk about that. What I'm going to talk mainly about is what the next steps are and what we're going to do with the money that we've just raised. But before I get to that, I'm going to talk a little bit about Blue Bush. So Blue Bush is on a granite, this pink unit that sits here, north-south. It's about 70 kilometres strike length. There's a project to the south here called Serra Verde. Serra Verde is a privately owned ionic clay mine that was put into commissioning and construction, was started producing only a few months ago. It's the only ionic clay producing mine outside of China, and it's currently going through its ramp up. It's a significant project, and we are on the same structure, which is basically a mineralised granite, and then you have the subtropical weathering on the surface that turns the granite and enriches it into ionic clay. We've begun our exploration there. We've got a lot of work to do, and we've got a lot of drilling and resource estimates to go, and that will be done, and hopefully we'll have something that looks similar to Serra Verde. Okay, let's talk a bit about Palmer first. The resource that I mentioned is on those two deposits there, C1 and C3. They're sort of in the middle of the project towards the north, and we're going to update those resources in the next 2 or 3 months. We made a discovery at C4. That C4 discovery will have a maiden resource out at the same time, so we'll have three updates on the resources coming out in the next few weeks. Those resources will include some of these results here. 36 metres at 4.2% copper equivalent, 21 metres at 4.8%. It's high grade, it's near surface, and those resources will be increased as a result. But the thing that I really want to talk about and draw your attention to are these other prospects. So Urubu to the north, C4 northeast, and Anta down here to the south. What we're trying to do with our Palmer project is prove the theory that these VMS systems, they cluster. And what that means is everywhere around the world where you find this kind of mineralisation, you can get multiple deposits in the same rock type. Now, this work was all done in the 1980s, so nearly over 40 years ago when these projects were first discovered. No one has applied systematic modern exploration to this district. In fact, no junior or no companies ever owned the 850 square kilometres that we have along this ground. We have done thousands of soil samples, we've done thousands of auger holes, multiple fixed loop EM surveys, IP surveys, to winnow down a whole bunch of prospects and get ready for drilling. And that money that we've just raised is going to drill these 4 targets over the next 2 months, and then we're going to drill another 4 once we've finished our preparation work. Probably C5, TG01, and then there's another couple down here, TG6 and TG2. These are all placeholder names, obviously, but we'll be drilling those in the next few months after we've hit our first 4 targets. So I want to talk a little bit about the first 4 targets because they're the ones that I think have got the most potential. We've done a lot of work here. This is the C3 deposit. Our drilling is in the red, the historic drilling by the previous companies in the white, and we've done some auger drilling across it as well. That one hosts about 2.8 million tonnes, about 2.5% copper equivalent. We think that this area called Urubu, which means vulture in Portuguese, is the offset extension of C3. And what that means is we know the northern end of C3 was chopped, and we think that it's been moved across to the east, and that's the extension. And if that's correct, we should know within half a dozen holes whether we've got the extension and we could add significant tonnage to the project overall. So that's one of the first prospects we're going to go and drill. These yellow plates here, they're conductors that have been estimated by our geophysicist based upon the fixed loop EM that we've done. We've also done IP. These are, up here we've got some really nice coincident auger anomalies as well. Basically, we take lots of different layers of information and overlay them together to try and understand exactly where we should be drilling. This is the prospect that I think has got the most potential. Anta is further south in the belt. Its soil anomaly is over 3.8 kilometres long. Now, this is a soil anomaly that we've built upon thousands and thousands of soil samples and lots of work. that goes into it. We close the spacing up to get an even better targeting. The purple or the pink lines that are in here are anomalies from the auger drilling. So we have our own auger drilling rig that punches through the surface and gives you a much more representative sample underneath. And then we did surface geophysics. So we've done multiple surveys of fixed loop EM and induced polarisation surveys to winnow ourselves down to one certain point. Now there's a reason why I think this is one of our better prospects. There's an old here called a historic hole. We found it only a month ago. The team was mapping and we talked to one of the local farmers. He rode on his horse, he found this old hole. There's evidence that there was a concrete plug there. And my guy said, well, what if we can clean it out? If we can clean it out, we can drop a probe down, not re-drill it, but drop an old probe down and do an EM survey down that hole. And we've done that. We got down to 170 metres in someone else's drilling. We don't know who it was. We do know that BHP explored here over 40 years ago for copper. They apparently drilled some decent hits, but at the time it wasn't BHP size. But for us, it could be something really significant. And look how close that hole is to where our planned drilling is basically targeting those conductor plates. So once I get the results back from that downhole EM, there's a real chance that we could even better target our drilling. I'm pretty excited about ANTA. And the last one I'm going to talk about quickly is C4 and C4 Northeast. So C4, we made a discovery in middle of last year. We've done now approximately 30 holes into C4 and we'll be doing we're doing a maiden resource on that in the next couple of weeks, next couple of months, excuse me. But to the north, we've got this similar shaped and sized IP anomaly. IP is just induced polarisation. We think that it's the most important targeting tool at C4. The EM, the electromagnetics, doesn't work as well at the C4 deposit. But this one also has a coincident base of hole auger anomaly over the top of the IP anomaly. So those two things together make it a really attractive target for us. It's probably where we're going to drill our first hole, and our drilling is actually due to start later this week. That's a couple of that's actually C4 itself. Our discovery hole was 37 metres at 1.9% copper equivalent. The entire slide deck is available at our booth. We're all there. The board's here today and will be here for the next couple of days. So please come and get the full slide deck because I've skipped over quite a number of slides. But yeah, C4 we think is quite a significant discovery for us. And this is the last slide I'm going to put up, I promise. When we listed back in the first quarter of 2021, we started drilling within 2 days of listing. We finished our first program of diamond drilling at the end of last year. We did 24,000 metres of diamond drilling over 100 holes. But along that journey, we found that we couldn't get reliable contractors for geophysics or for auger drilling. So we went and bought our own equipment. We bought our own fixed loop EM, our own IP, and our own auger rig. And as a result, the amount of work that we've been able to complete on the course, and we've got 850,000 square kilometres, it means that we've been able to do fantastic work. There we go. Thanks very much.
Thanks, everybody. Look, I'm quite proud of the achievements of the company over the last 12 months since we're here. We continue to push on with both the Makuutu project, but what's really gaining the most amount of traction is the rapid progress that we're making with Ionic Technologies, which is our recycling business in the UK. So if we look at the supply chain, it's incredibly complex and there's a lot of value addition steps. What we've done over the last 12 months is move forward with relationships to help build what we think is a unique potential, a unique opportunity for this company to become more integrated into these new supply chains that are forming. So over the course of the last 12 months, we've announced partnerships with Less Common Metals and Ford to develop a UK supply chain on recycled magnet rare earths. And earlier this year, we announced a partnership and a JV with Veritas, which is an exciting opportunity, again, to work with another company that's in the Brazilian theatre, developing ionic adsorption clay. And we think that the relationship that we've got with VMM can position the company to certainly execute the delivery of a refinery, but also take our recycling technology to that market. So if we just quickly cover off on the assets, we've got the Makuutu Rare Earth Project. So this is an ionic adsorption clay deposit in Uganda. We currently own 60%. We've agreed to move to 94% with our partners. We've completed a feasibility study. We've now got our mining licence. We've got our environmental permits. And we've built a demonstration plant where we're now making mixed rare earth carbonate in Uganda. The other end of the supply chain, we've got our recycling business where we've also built a demonstration plant in Belfast. We're now producing high purity separated magnet rare earth oxides. We're the first company on the ASX to produce high purity terbium and dysprosium, and we're leveraging that product into supply chain relationships with metal alloy and magnet manufacturers. And the relationship that we've defined with Less Common Metals and Ford is a model that we will see replicated with other partners as we take that technology forward. And then finally, the joint venture we've announced with VMM. We are looking now to leverage that refining opportunity and recycling opportunity in Brazil, putting a footprint in that market and leveraging that into what has the potential to be a much larger magnet rare earths opportunity for the company. So I just want to touch a little bit more on the opportunity with Ionic Technologies. We are in the UK, we're in Northern Ireland. The technology itself has come out of Queen's University, Belfast. We acquired the business in April of 2022, and over the course of the last 2 years, we've grown a team of 5 to about 29 at the moment. We've had significant support from the UK government, about £3.7 million of grants across 3 programs, which are helping the company de-risk the technology, demonstrate the technology, and now advance a feasibility study for a commercial plant in Belfast, and also demonstrate what that supply chain could look like for the UK. Simply put, we take end-of-life materials, so magnets, but we can also take the waste products from the production of metals, alloys and magnets. So we take that material and we unlock the intrinsic value of the rare earths in that waste material, taking it back to a high purity oxide, which can then be deployed in the production of new metals, alloys and magnets to make newer, better sintered magnets for the energy transition, and also importantly, military and defence. The concept here, and this one shows the recycling and our ability to take end-of-life turbines and repurpose that material, effectively upcycling it, because we take those end-of-life magnets and we're able to extract the rare earths, which can now be deployed in making better magnets that typically thrift the amount of heavy rare earths. So we can take that material to make it stretch further into more magnet capacity. The technology itself is environmentally friendly because we're not having to mine all that material in order to produce the magnet rare earths, which is what the supply chain is looking for. We can provide a transparent supply chain. We can show the provenance of the material, where it's come from and where it's going to. We can create that closed-loop domestic supply chain, which is less susceptible for manipulation from external forces. We have a stability on price because, again, we have a process that's treating the same 4 rare earth elements from an upgraded product. So a permanent magnet typically has got about 33% magnet rare earths. So in order to produce 1 kilo of separated magnet rare earths, we're treating about 3 kilos of magnets. And the technology is cookie cutter. What we're doing in Belfast, we're now evaluating the rollout and putting that technology in other markets with partners that are looking to expedite the recycling in other jurisdictions. So what's happening in Belfast, we now see, and we have the potential to see that rapidly deployed over the next 12 months. At a high level, what we do is we take the magnets, we crush them. Well, first we demagnetise them, then we crush them, we mill them, we digest them. So it's a hydrometallurgical process. Once we've digested them, we can then separate the rare earths away from the iron and the base metals that are present in the alloy. And with that high-grade, upgraded mixed rare earth product, we're then able to separate that into the individual rare earth oxides, and ultimately we take them all the way through to high-purity oxides. And if you want to come past booth 13, we're happy to show you the samples that we've been generating in our demonstration plant. The technology has a lot of flexibility. It can take significant variability, and what the work that we've done over the last 2 years has demonstrated to us is that there is substantial variability in the quality of the magnets that have been produced over the last few decades, variability in the ratio of the rare earth elements, and it's that variability that means that if you were to recycle this material into a mixed product, it has a limited capacity to go into advanced manufacturing for sintered magnets today, because the supply chain is looking for consistency and quality in order to feed into the OEMs across the electric vehicle and wind turbine industries. Belfast, as a location, is probably something that a lot of you wouldn't have really had an appreciation of the compelling opportunity that we have there. And truth be told, since we acquired the technology, policy and what we're seeing unfolding in that Belfast market is making us even more encouraged at the decision that we've made and the opportunity that's at our doorstep. Belfast itself has incredible infrastructure. At one time in history, it had a third of the world's shipmaking, so it has a deep water port and the infrastructure to support the rollout of offshore wind, but also importantly the decommissioning of offshore wind. The UK was one of the first adopters of offshore wind, and so with that fleet now reaching the end of life, there is an appreciable amount of those wind turbines that we will see coming through the Belfast harbour, and our location, prime in the middle of that prime in the middle of that harbour, presents us with a unique opportunity. We've also seen policy supporting our decision in Belfast with the Windsor framework. At a very high level, what that means is that we now have the ability from a site in Belfast to participate in both the UK market and the EU market. And that's important for our ability to also support the European Critical Raw Material Act, which has defined a target of 25% of the magnet rare earth supply chain to come from recycling by the end of this decade. Beyond that, obviously, there's very strong relationships with the US, and we're closely monitoring progress with relationships and the Atlantic Declaration between the UK and US, and obviously the AUKUS relationship, where a plant in Belfast has the ability to satisfy a very strategic military and defence capability. The image on the left shows the D3 yard, which is an offshore wind terminal that's been established approximately 300 metres from Ionic Technologies' existing demonstration plant. And if you drive past that today, you'll see probably a few dozen wind turbines and about 4 or 5 nacelles that are being set up there ready for the deployment and the reconditioning. So we're in a prime location to take advantage of this opportunity at our doorstep. And as we advance the feasibility study for the commercial plant in Belfast, we've also identified a spot smack bang in the middle of that harbour, which we're working with stakeholders to support the commercial plant deployment. So if we look quickly at the timeline from lab scale when we acquired the business, we quickly moved through pilot with the support of the government on the demonstration plant. We're now going 24/7, producing separated magnet rare earths. We've been inundated by that capability, and we've now got appetite to fill that plant for the next 18 months. So we see a huge opportunity to consider increasing the capacity of the demonstration plant, but also thinking about a much bigger recycling opportunity in Belfast. And with that, we're completing the feasibility study, looking at a 2026 planned operation with the ability to scale this out globally. Touch briefly upon the European Critical Raw Material Act, which is a policy that I think we'll see other countries look to adopt. Importantly, they're looking at 25% of their supply chain to come from recycling, and they've also introduced policy which makes it illegal for the end-of-life material to be exported outside of the jurisdiction, which again creates capacity for that recycling venture to take off. And I just want to quickly touch upon the Makuutu Rare Earth Project, which is our ionic adsorption clay in Uganda. We're now producing mixed rare earth carbonate. We've completed a feasibility study, and that mixed rare earth carbonate is being used now to progress advanced offtake negotiations as we explore the development of these alternative supply chains. Makuutu itself, we're about 1,000 kilometres from the port of Mombasa. In Uganda, we've got extremely good infrastructure, so we're well supported by hydroelectric power. The product that we make at Makuutu is very rich in magnet and heavy rare earths, and that's a unique offering, especially for Western governments that are now looking to secure the heavy rare earths to look at the decoupling with the existing supply chain. The tenements that we cover are about 300 square kilometres, and that mineralisation trend is about 37 kilometres long end to end. We completed the feasibility study last year with a capital investment of around 120 million, and we continue to work on the financing of that and the offtake and the strategic partnering required to develop the project. Finally, just want to quickly cover off on the joint venture that we've announced with Veritas. So we will work together now to develop both refining and recycling capacity in Brazil. 2 weeks ago, we hosted a delegation from the Brazilian government to Belfast to talk about the recycling opportunity. And we see a huge opportunity in that Brazilian market given a low-cost base, substantial endowment of ionic adsorption clay potential in Brazil, but also, you know, a huge upside for further advanced manufacturing in that market. We believe that recycling is going to be an early value addition in that market, and you know, we have been in discussions with the Brazilian government for nearly 2 years about the opportunity. So it's something that we're very keen to explore in partnership with VMM. Finally, the board and management. Earlier this year, we appointed Brett Lynch as our new chairman, and Brett certainly supported the company, investing approximately 2 million in the last 4 months. Quick snapshot of the corporate profile. Obviously a pretty challenging market, and I know we're all feeling it. We've just raised another 5.5 million, and now looking to take that funds and kick some goals over the course of the next few months. And with that, I'd like to thank you all, and if you have any questions, happy to answer them at booth 13 and also show off our high purity magnet rare earth oxides. Thank you.
I could almost let you take the stage with your knowledge of the project so far. But yeah, I'm Rob Ryan, Managing Director of Rox Resources. We've got 2.3 million ounces at UME, which is a high-grade gold project just outside of Mount Magnet in Western Australia. The UME gold project has had a historical production record, so there's been over sort of 600,000 ounces produced from the area in the past, and it has historically always been high grade. The last mining campaign there was from underground, where they were producing around 10 grams a tonne, and I've got no doubt that we'll be able to produce a mine plan where we'll be achieving sort of in excess of 4.5, 5 grams a tonne through the life of mine here at UME. And the resource that we updated in January this year will form the backbone of what we've put together for our pre-feasibility study. It is a high-grade gold resource. When you look at the gold developers on the ASX, we are comfortably one of the highest grade gold developers, and we have the scale of ounces to be able to justify a standalone development. Importantly, we added a 48% increase to the indicated portion of that gold resource. That allows us to go through feasibility studies, and we're currently underway with those now, and that'll be completed in June. The idea is we want to see around a 750,000 tonne per annum operation, producing somewhere in that 4.5 to 5 grams a tonne. I think we will be a high-grade development with a very long life. We have regional and near mine opportunities. With the regional exploration, we've got 60 kilometres of the UME shear zone, which is very underexplored. And with the near mine area, that has 1.1 to 1.8 million ounces in the exploration target. That will be able to add further life to the UME gold project. We are currently undertaking an entitlements issue for current shareholders to be able to participate, and we're looking to raise around $7.5 million from our investor base. The project's located about 120 kilometres southeast of Mount Magnet. We do also have the Mount Fisher, Mount Eureka gold and nickel exploration area. That's a non-core asset that we're currently looking to monetise for further funding within the company. On the corporate sphere, our major shareholder is a group called Hawke's Point Capital, a very involved private equity group, very knowledgeable, who support us continually with our activities moving forward. Venus Metals also sit as a 16% shareholder. They got their shareholding through the acquisition and dissolving of the joint venture last year. So now that gives Rox 100% ownership of this whole area, and it hasn't sat under 100% ownership in one company for a very long time. The entitlements issues just opened yesterday, and already we're seeing a number of shareholders start to contribute their entitlements. There will be applications for shortfall, so if there's any potential new investors who are willing to make an addition to that shortfall application, please feel free to reach out to the company. The idea is we want to be sitting somewhere with a cash position of close to $10 million at the end of the entitlements issue. That'll give us the ability to really fund the final parts of the pre-feasibility study and then take the company and start some of these early works on the DFS. We want to start drilling out the inferred stopes that we have in our study to increase the confidence in those for definitive feasibility studies. We also want to do further metallurgical test work so we know that we're confident in our project moving forward. What we have here at UME is going to be a long life gold production asset, and we want to make sure that we spend the money up front to make sure we successfully execute that. And that resource base is underpinned by a very high-grade underground resource. We're looking at 9.7 million tonnes at 5.5 grams, 1.7 million ounces. Of that, there is 5.6 million tonnes at 6 grams for 1.1 million ounces in the indicated component. That'll form the backbone of our pre-feasibility studies. We are really looking forward to presenting that at the end of June, and we're confident that we'll have a long life asset here that'll be in that production realm of that 750,000 tonne per annum. With that increase in gold confidence, it allows us to be able to move forwards in the studies, plus it sets us apart from our peers on the ASX. And you'll see in the chart below, there is very few peers on the ASX that have the scale of asset that we have at UME. And there is no one in comparison on that grade. At 4.5 grams a tonne, we are easily 50% greater to our nearest peer. This starts putting us really in a prime position to take this forward into development, especially when we're looking at a forecast, a projected high Australian dollar gold highs. And when we look at the asset, it's not 2.3 million ounces spread over 5 or 6 different deposits. This is 2.3 million ounces that sits over a 1.5 kilometre strike length at UME. It is one development opportunity. We'll be able to have multiple declines into this to increase the productivity. But essentially, this is one underground mine that will stretch over about a 1.5 kilometre strike length. At 4,500 ounces per vertical metre, there's not many projects that compare to this, and I haven't worked on many projects in the past that have this type of ounces per vertical metre. When you look at where the OVMs start dropping off below that 400 metre mark, it's bound by a lack of drilling. The deepest hole we've drilled to date at UME sits 950 metres below surface on the main lode. That hole ran 6 metres at 16 grams a tonne. There's been no hole drilled deeper. The deepest area that we have in the link area, we drilled last year, went 22 metres at 12 grams. This is a very high-grade gold deposit. We know that when you have the structure, when you have the right geology, that the grade will continue at depth. And I've got no doubt the more we continue to drill out here, the more ounces we'll add. We've got an area south of the main lode, out at Pollard, that effectively has no drilling at depth. We want to continue to drill out these assets and add more ounces to the resource moving forward. And the pre-feasibility study will highlight a long-life, high-grade gold operation. The mineral resource update's been complete, the mine planning's been complete, the hydrology's been complete, and the environmental studies have been complete. We are focused now on the MET test work and the process plant design, OPEX and CAPEX costing. We've been out to RFQ to underground mining contractors for rates, and there's been no major surprises to our estimates in our financial modelling. We don't see any major changes to the PFS moving forward, and we're quite comfortable that we'll be able to achieve that end of June timeframe. Now, with the metallurgy at UME, it is quite different to a lot of your projects in WA. The majority of the gold sits in native gold. Around 75% of the gold will be either native fine gold. There is a 25% component of that ore that is gold in solid solution in arsenopyrite. But historically at UME, they've had a very successful track record of processing ore. In the mid-90s, they had a BIOX plant on site that was regularly achieving about 95% recovery. We've got multiple test work campaigns underway that will assess different OPEX and CAPEX methods for UME production moving forward. And we're quite comfortable with our skills and expertise that we'll make a success of this project moving forward. And we've got a pipeline of exploration projects. We've got a 60-kilometre tenure of the UME shear zone where the only gap in that tenure is where Ramelius Resources have the high-grade Penny West gold deposit. They haul ore from that Penny West gold deposit straight past our doorstep at UME out to Mount Magnet. I've got no doubt that there's many more potential UMEs sitting undercover here, and some of the drill intercepts that we've had at Curran's Find and the like show that there is, multiple sort of very short strike length, high grade zones sitting around that sort of 2 to 3 metre wide at 30 gram a tonne grades. But when we look at the near mine area, there has been very limited drilling outside of that main resource area. We had Paddy's Lode that was discovered probably about this time last year. We've defined that over a 200 metre strike length, commencing from about 150 metres below surface down to about 200 metres below surface. It's a 3 to 4 metre wide shear zone, ranging in grades from about 8 to 10 grams a tonne. That sits just to the southern portion of Pollard, where Pollard was mined in the 30s and 40s by old-timers. Now, a lot of that data we've put into resource models and the like, but obviously we can't quote those with AXX because of the QA/QC on those. But when you start looking at that area, the old timers were mining 20 plus grams a tonne through those drives. Our resource through that area currently has a lot of that grade of being around 4 grams. I've got no doubt that the more we drill some of this southern area and we get a better handle of the geology, that we'll see rapid grade increases through that area. Same with the Link area and Main. There's some very high grade areas in here that just haven't been drilled. And I believe these will add further ounces to the project when we're moving forward. I spoke about the depth, and when you look at Main Lode developed through drilling down to about 900 metres, Link has only been drilled to about 500 metres. There is a lot of drilling at Link to be able to add to that. And as I said before, when you've got the geology, when you've got the shear zone there, we know you'll get high grade mineralisation. Midway in Paddy's had the potential to add multiple mining areas to a mine plan. They're very high grade, ranging between sort of 3 to 6 metres wide at 10 to 30 grams a tonne. There is multiple opportunities here at UME to continue to add more and more high grade to the production plan. With our regional targets, as I said, Curran's very narrow vein, high grade, over short strike lengths, very similar to Penny West. We'll continue to advance these projects over the time, but these will add further upside once we're in production. Something that came out of left field late last year was our joint venture partner, Venus Metals, actually did a lithium soil campaign. They got a very high-grade lithium anomaly. They subsequently went out, did a number of rock chip sampling, got 4% plus lithium in rock chips. That warranted us to go do a number of soil campaigns over the area, and we defined a 10-kilometre trend of lithium anomalism. At the very southern portion of that, we got a very high-grade lithium anomaly. We then did a sort of 400 by 500 metre mapping exercise, and we've seen the outcropping pegmatites surface here between sort of 10 metres and 30 metres wide. Subsequently to that, Venus Metals did a drilling campaign in February of this year, and they hit multiple high-grade lithium intercepts, 24 metres at 1.7%, another 15 metres at 1.34%, and 7 metres at 1.5%. It shows that there is lithium prospectivity within this area, and there is an opportunity for us to look at further funding opportunities by getting JVs or earn-ins on these tenements. Similarly with Mount Fisher, Mount Eureka, very high-grade gold and lithium prospectivity, and again, probably sits better within a junior company, and we'll look to monetise these assets in the future. And that's about a wrap. To look forward for Rocks over the next 12 months, we really want to focus on completing our pre-feasibility study in June. From that point on, we will want to launch straight into a definitive feasibility study. We know that this will be a gold mine again. It is a high-grade gold deposit. We'll do the work now ahead of the DFS and ahead of releasing the pre-feasibility study to make sure that we've got a development methodology to be able to move forward on the asset. We've got many near mine and regional discoveries that we can add, and Christine is pushing me to get off the stage. So thank you very much for your time today, and come to booth 19 to have a chat.
Yes, we look for giant base metal deposits, but along the way we stumbled upon a giant rare earth deposit, so that's what I'm really going to talk about in this talk. So let's get into it. A little bit of snapshot about Red Metal, just to get this stuff out of the way real early. We listed 21 years ago with 80 million shares. 21 years later, we got just under 300 million shares. How do we do that? No share consolidations, anything like that. We've got a market cap of about 46 mil. We've always looked for giant base metal deposits. The majors have always been interested in what we do, so we've managed to get strategic alliances with Phelps Dodge, Freeport, Oz Minerals, BHP are currently in alliance with us doing the base metal stuff. So we've sort of been spending $2 to $4 million a year every year for 20 odd years. We found a base metal deposit called Maronan. We've spun that out 2 years ago. Come to our booth. There's two 30 million tonne large base metal deposits right adjacent to each other sitting there. We own 53% of that, so you get that for free with this one. But what's ticked our little share price along the last few days, or the last 6 months, has been this rare earth discovery that we put out to the market. It's rather new, something a little bit different from what's being talked about in the ionic space. It's not like the carbonatites and monazite deposits that you see elsewhere around the world. It's something rather special, and I really want to introduce that to you today and a bit about that. You can see there when we announced the drill results initially, we got a little bit of a kick up. We put out the metallurgical results that showed that this is actually, it's leachable. That really doubled our share price, and we're about to put out in probably the next 3 or 4 weeks the optimised leached results from the proof of concept stuff, and we really start drilling on this rare earth project in 2 days' time, doing about 10,000 metres of step-out drilling. So there's a fair bit of news flow to come. Again, it's outlined there, but we haven't given up our core business. We're still doing some really big base metal exploration with about 4,000 metres of diamond drilling with BHP along strike from Winu, which is in the Paterson province of Western Australia, where there's some really big ones. We've also got a big giant zinc deposit and a big IOCG target that's got some government grant funding as well that we'll be doing in the background. But today I really want to introduce you to this rare earth discovery of ours and just give you a bit more info on that. So it's located just 20 kilometres from southwest of Mount Isa. Wonderful mining town, about 30 to 50,000 people, a smelter, got an acid plant. We've got lots of water at Leichhardt Dam, and we've got a gas pipeline that actually goes right over the top of our project. That's the discovery there. Oopsie daisy, there you go. That's the discovery line there that we've drilled. So we've really just done 2 lines of drilling, and before we stepped out from that and did a whole lot of infill drilling and step-out drilling, we thought we might want to actually do some metallurgical work on it first to prove that we can get this stuff out and turn it into ore. It's a key first step with rare earths because a lot of the time we're breaking new ground. So just a sort of 101 of rare earths for you. There's 2 types of rare earth deposits emerging in the rare earth space globally in the geological world. There's these complex high temperature ones. They require quite complex metallurgy. They process this mineral called monazite, which is a phosphate. They require temperatures of up to 800 degrees, of heating acid up to 800 degrees with cracking the monazite mineral, and they have a capex of about 1.6 billion to build. Then there's these lovely little simple low temperature leachable deposits. These are really emerging ever since somebody started producing electric cars and the demand for magnets went through the roof. Suddenly everyone wants neodymium. So a lot of people are looking for these low temperature, low grade but leachable simple deposits. And the clay-hosted deposits in China are good examples. There's been some wonderful ones being found in Brazil, and Meteoric's probably the best example. They've got a market cap of around 400 million, red metal 50 million. And then there's this new discovery called Sabella, which we found in Mount Isa, which is this granite-hosted variety. It's a soluble rare earth mineral hosted in a low acid consuming granite. And the beauty of these simple low temperature deposits is they can be they've got this potential for being a really low capital to build, anywhere from 250 mil for a sort of a heap leach like we're talking about, to probably around the 400 to 500 mil for a vat leach, which is what a lot of these ionic deposits are talking about. And they can also operate at very low operating costs, so they're like super low cost, low capex operations, and something that probably junior companies can transition into being miners with. Just a little bit on the geology. It's basically this granite that's enriched in rare earth mineralisation. It's 12 kilometres long, 3 kilometres wide. The rare earth mineral is this unusual fluorocarbonate mineral called bastnasite and sinchasite, and that mineral is soluble at ambient temperatures in weak acid. The key, though, is that the host rock is not acid consuming. It's an granite rock which doesn't react with the acid. So that combination of a soluble ore mineral in a low acid consuming rock is what we call metallurgical nirvana, in that some of the best deposits in the world, the biggest copper deposits in the world, are just that. The giant copper deposits that I work for with Phelps Dodge, that's soluble copper mineral is chalcocite, hosted in a porphyry granite, and they mine some of the lowest grade bulk tonnage heap leach operations in the world. We think this is one of those, but rare earths, and that's the opportunity that we've identified, and we're still identifying. So what have we done? We've just done 2 lines of proof of concept drilling, and it revealed these 2 wide zones of rare earth mineralisation, each about 1 kilometre wide. But the granite itself is, like I said, 12 kilometres long. These zones are still open north and south, and you can see there's a zone here and another zone there. They're open to the north and south. There's a hole up here 4 kilometres away. It's still got similar mineralisation in it to here. And once we did that drilling, then we've done this proof of concept metallurgical work, and I'll go into that in a little bit more detail. But this is what the granite looks like. It's a pretty benign looking granite, nothing too special. But the thing to note, you've got oxidised granite at the top, transitional granites, half oxidised, half fresh, and then fresh granite. A couple of key points is that it's very coarse grained, and the fracture intensity increases as you come into the fresh. That's all feldspar in the top. It's not actually clay weathering, it's fresh feldspar that's just oxidised with the limonite in the biotites. So it crumbles and breaks up very easy. That's from about 0 to 10, that's from about 10 to 20, and that's fresh. So we've got this wonderful weathering profile sits on top that's friable granite. Whoops. So we've done a little bit of seismic refraction over the top of the granite. We can map that granite weathering boundary, and it goes down to about 20 metres, varying ups and downs. But this will offer really wonderful comminution and mining advantages. And so the first X amount of years of this thing will be a pretty soft dig. The preliminary leach tests were really interesting. They showed they were quite successful in that they showed we got strong rare earth extractions with relatively low levels of impurities using low levels of sulfuric acid at ambient air temperature. So we're not heating this stuff up to 800 degrees. We're just crushing the rock, running acid over it, low temperature acid over it, and catching the stuff out the bottom. What do we get? And we got 70 to 80% of the rare earths of the neodymium, and we also got about 40, just under 50% of the heavy rare earths, the terbium and dysprosium. They're the magnet metals. They're the ones that everyone wants. They're the ones that are worth money. We did this by only consuming about 37 kilograms per tonne of acid, but that was the first test, and this was with pH 1, and it was run for only 4 days effectively, with a bottle roll technique. The minimum we've got in that leach test was about 22 kilos per tonne. So those minimums and maximums you see there are probably what we think we'll get when we optimise this work. And we're doing this optimisation study at the moment. We also show that we've got low average impurity extractions of aluminium and iron, but as someone has pointed out in the internet world, the iron and aluminium are high compared to the amounts of rare earths. That ratio is higher in aluminium compared to the rare earths. But that's really just a chemical solution, a problem that we can solve, and we're currently doing impurity removal trials on the leachates that we've got from the thing, and we'll probably have some results out on that in about 3 or 4 weeks. But it's not a problem that can't be solved. It's just something you've got to deal with when you're dealing with a whole new deposit type. And I guess I might add too there that the uranium and thorium are extremely low. So unlike some of these high capex, high monazite projects, we've got a lot of uranium and thorium issues and handling issues. We got very low levels in that from the leaching, and it's a very low uranium and low thorium granite to start with. So what the metallurgical first pass test really showed us was that this project has the opportunity to be really simple process involving heap leach, potentially involving heap leach situations. So that just means the metallurgical results are showing us we can just crush this, pile it up in a heap and leach it. That's a lot cheaper than doing vat leach, which is what a lot of the clay systems are using, and it comes with a lot less problems in terms of handling and filtration. But more importantly, the data shows we had significant opportunities to increase the revenue and reduce the processing costs by increasing the particle size. So what we found and showing in this table is in this graph is the coarser we left the rock, the more we got out. And that was kind of unusual, and it goes against most thinking with these systems. But really it's because the finer we got it, the more we start to interact with the silica and we suck a bit of the rare earths out. We also found that by increasing the residence time, we were able to get more out. So that gives us some clues that this is ideal for a heap leach situation, because we can put it up on a heap leach. And in a heap leach, time isn't your enemy. You normally leave it up there for 3 or 4 months. We've only been doing this for a few days. Also changing the pH, we saw we can drop the pH from 1 to 1.5 to 2 to 3. And we're doing those experiments at the moment. When we look at what we're extracting quite a lot of neodymium equivalent. It's very similar to that of meteoric, and again, meteoric's got a capex of about 400. We're about 354. So yeah, if you look at that data column, this is in one of our ASX announcements, but we're extracting quite a lot of neodymium, pretty close to what meteoric's getting out. Okay, right. So where are we doing? What are we doing next? I'll get straight into that one. We're basically doing the optimisation work. The results from that are going to be out in the next probably 2 to 3 to 4 weeks. There we've done a whole range of tests at a range of pHs for a range of sizes. These are 10 mil and 15 mil crush sizes. They're extremely coarse. This is the kind of stuff that you do with iron ore, those sort of crush sizes that you do for iron ore export. And we're running those not for 2 and 4 days, but we're increasing those to 28 days. We've even done one test at a pH of 3 for 53 days, and we'll be putting out those results in the coming weeks. We're also doing impurity removal trials on those leachates that we get out of that work, and hopefully at the end of it we'll be able to produce a mixed rare earth carbonate, so you'll be able to see what sort of saleable product we can produce, what are our grades in that saleable product. We're doing comminution tests to show just how soft this rock will be, and when you coarse grind when you're grinding something to a coarse size fraction, it really doesn't take a lot of energy to do that. So that'll feed into the mining study that we're about to embark on towards the end of this year. But as of 2 days ago, tomorrow, the next day, we're going to be starting a 10,000 metre drill program. It's on an 8 by 3 kilometre grid, and you can see those black dots on this diagram are where we're going to be doing the drilling. Step out drilling, 800 by 400, 800 by 200 metres centres, 10,000 metres of drilling, and then we're going to do some localised resource drilling, hopefully to get inferred, maybe indicated if we can. We're also doing some column leach tests at the moment on some of the fresh material as well. So that's what we've got going. Lots of news flow in the rare earth space. We're still honouring where our heart is in base metals, and we own 53% of a giant ore deposit. So come to our booth 76 and we can run you into a little more detail on some of the base metal stuff. Thank you.
Thanks, Chrissy. Yeah, we love a challenge. We'll get there. Bulletin resources. I'll just start with a quick introduction before I get into our Ravensthorpe project and give you a bit of a story of where we're at with it. We're pretty well funded with over $12 million in cash shares and receivables. 300 million shares or just under on issue there, with a market cap of about 15 million, so a very low EV at present and plenty of opportunity to improve it. Very experienced board with us who have been very supportive throughout this process, and also, very importantly, a large shareholding. We're very keen not to dilute and to protect our funds and use them as best as we can. I want to talk about our main project, our Ravensthorpe lithium project. We've had a few hurdles in there. We've just put up front there, Department of Mines has refused our drilling permit, but it's a very good project for us. And I just want to go through with that, about what we're doing with it and why we think we can still get going forward. The project itself is 100% owned by ourselves. We're only 12 kilometres from Mount Catlin, an existing lithium processing plant and the processing mine itself. We've got very good mineralisation at surface. We haven't done any drilling in the area which we want to drill it at. And our preliminary metallurgical test work shows we can produce a very strong and very high grade concentrate. Our main area of interest is a 4-kilometre trend of spodumene-bearing pegmatites. There's over 100 pegmatite outcrops we've found to date, and we've seen very high-grade spodumene in there, and that's the result of the coarseness of the spodumene, just like at Mount Catlin, just down the road there. So we're seeing grades of 5, 6 and 7% lithium in our rock chips. And where we don't see spodumene outcropping on surface, we use other geochemistry such as potassium-rubidium ratios. In the very southern part of the previous slide there, we've got an area called the big pegmatite, which is our main area of interest. And in that 500 by 700 metre area there, there's about 40 outcropping pegmatites, where we're seeing very low potassium-rubidium ratios, which indicates that there's strong mineralisation at depth, as well as we're seeing good coarse spodumene grades. So it really shows to us that there's high potential of finding spodumene at depth. We've taken about 100 kilo sample out from that area there, and we've put it through effectively a desktop study, a benchtop test, the same flow sheet as Mount Catlin mine, and we're seeing very similar product as what to Mount Catlin is processing. We're seeing concentrate grades greater than 6% lithium, very good recoveries even under bench scale test, and we're seeing importantly very low iron, which is very important for the high quality and a high price situation. And we believe with further work you can improve those outcomes to get a very similar product to what's being shipped out of Mount Catlin just now. Our drilling proposal is focused on the main area which we've seen of spodumene, and that's the big pegmatite. We're proposing to clear up to 2.3 hectares of drill pads and tracks to get into the area. There's no drilling in this area at all just now. It's an hour and a half walk into this area, which is why we need a fairly long track just to get into the area. We've done environmental surveys in the area, and they show that all our proposed works are of low impact. Earlier last year, by a local community group, we were referred to the EPA. The EPA spent most of last year reviewing our project, and at the end decided that not to assess it. We weren't significant enough for their review. We went back into the DEMERS process, and then last month, DEMERS decided not to assess our drilling proposal. We believe they haven't taken into account the work we have done in environmental studies and in our offsets and our avoidance and mitigation measures in doing this project. We acknowledge we're in an area that has been largely cleared to the north through agriculture, and there's not all that much vegetation left in this area. It's still significant, but it's all very precious down that part of the world. And we've done our drill plans accordingly, and we've been very cautious in what we've done. So we've lodged an appeal with the appeals convener, and we're hopeful that with further discussions we will get our project up and away. I just want to go a bit into what we have been doing. We've been fairly silent on this because we acknowledge it's a sensitive issue for some people. We've been very proactive in looking at our ESG, environment, social and government practices in the area. We're proposing, as I said earlier, up to 2.3 hectares of clearing in this area, and we're in the Kokarrinup Timber Reserve. Now, for those who aren't aware, a timber reserve is an area of vegetation that's set aside from clearing from earlier days when there was mass clearing for the farming industry. There's lots of agriculture in there, and a lot of the local forestry is gone through forestry. But we're within 352,000 areas of forest in the area. 2.3 hectares is not a significant amount, but we acknowledge it's always important to do the best you can. Clearing and drilling has occurred previously in the Timber Reserve back in 2017, not in the area we have done, but DEMERS, when they granted us our tenement in 2020, they noted that we could do exploration in the area. As part of our drilling program, we've done numerous avoidance and mitigation measures. We acknowledge we're in a sensitive area there with vegetation. We've reduced our original program to a smaller program to test the main big pegmatite area. There's no threatened flora in the area, so we've gone down the next rung into priority flora, and we're avoiding all that as well. And we're also taking additional measures, such as having an environmental officer with us when we do our clearing, so making sure we reduce our impacts to erosion, dust, fire and noise. We've already committed to rebuilding all the tracks and reseeding back to native vegetation, and we've also committed to putting in offsets so we can replace the area with vegetation from other areas. One of the issues for DEMERS is that there are cockatoos in the area. I've lost my mic. Ooh, I'm back. To the north of where we're drilling, there are Carnaby cockatoos, and that's one of the important, they are a threatened species, and it's one of the things we seriously looked at when we considered our program. We are to the south of where they are nesting. We've designed our track and pads to avoid all nesting trees. We've committed to working outside the cockatoo breeding time, which is in spring, so we've got time outside of that time to work in the area when they're not there. We're limiting the area of clearing of foraging habitat or food that they eat to 0.64 of a hectare, which is well below the threshold of referral in the federal system. And we've also, for other animals as well in the area, avoiding all malleefowl nests, and we've got other measures to avoid impacts to other fauna and their habitat as well. So we've really gone in and made a strenuous effort to make sure we're doing the best practices as what we can. But we do acknowledge we are operating in an area that's sensitive. There are some locals in the area who don't want any mining, and we acknowledge that. And maybe it's part of that. What we need to do is educate people in the area, because we do believe that mining can help habitat loss as well from climate change. Even the EPA recognises climate change is likely to involve habitat loss going forward. In 2010, there was a heat wave, unfortunately, where several hundred cockatoos suffered through heat stress. And just as a note there, I'll put up, in February this year, globally around the world, there was 10 stations of long-term weather stations that recorded the record temperatures. 5 of those 10 locations are in Carnaby Range. So there's threats as well, not just to habitat loss, but also to climate change. And lithium is one of those metals that can help with the climate change situation. So I really understand DEMA's point that they want to conserve, but long-term, which is outside their scope of influence and review, is the longer-term impacts of climate change. So as an industry, we can, and maybe we need to promote ourselves a bit more as well in positive outcomes. We're an industry that can produce enormous amounts of money. Last year, Mount Cattlin produced over $500 million in profit. And it doesn't take much of that money to go towards working towards the environment to improve outcomes. For example, in Carnaby cockatoos, mining can help by we can purchase land that's forested and keep it aside for conservation purposes. We can purchase farmland and rehabilitate that and increase habitat areas. There's all sorts of scientific programs we can fund too. We can do small little things like building water dams for the birds so they've got enough water in the area, and even feral abatement and other programs such as that. So there's a good opportunity for us, I believe, as mining industry going forward, that we can help the environment. And even ourselves, in our own little exploration program, it's only 2.3 hectares in a broader scheme, but we can also offer a net environmental benefit. We've already put aside funds for environmental programs in the area. We've spread our feelers out to the local conservation groups to work with them to help the Carnaby cockatoos and other fauna in the area. We've already done work looking at artificial cockatoo breeding nests. They work very well in other parts of the state. There's no reason why they can't work in the Ravensthorpe area. And we've put aside funds to purchase land for cockatoo and other habitats as an offset for the small work that we're doing. And it's not just the environmental side as well, it's also the social side that we're also looking at as well. Ravensthorpe, although it's largely largely an area of agriculture, has a very significant mining community. Nearly 0.25%, up until recently, up until last week with the nickel mine closed, were involved in the mining industry. But even outside of that, lithium is still a major employer in the area. The Mount Cattlin lithium mine is scheduled to close in 2028. It's only 4 years away now. And there is a long-term trend for lithium, so we can see the market going forward, and there's an opportunity for us to use that plant should it become available. So with our small plans and our practices and environmental studies, we feel we've got a good case with discussions with the appeals convener to move forward and to get a positive outcome, and that's what we're aiming for on that stage. Ravensthorpe's not our only project. We do have several other projects mainly focused in gold. Our Lake Rebecca project is 150 kilometres east of Kalgoorlie. We're rapidly being surrounded by Ramelius Resources who've, over the last couple of years, taken up a very aggressive stance in the area which shows just the prospectivity of the zone. We're in the very southern part of the Canalpi terrain. Since 2018, there's been 2 large deposits found, Rebecca and further south, the former Breaker Resources Lake Roe, which is now Ramelius. Our Rebecca project is right on the boundary of Ramelius's Rebecca deposits. And in around the Rebecca area, their gold trend extends into our ground. We've drilled just to immediate. We've sold, back in 2019, we sold some ground to, at the time it was Apollo, for $5 million in shares, but we've still kept the remainder of the trend further to the north. So we've still got 700 metres of untested strike to test, and the grades we've been seeing to date are very similar to those that we've seen to the south. We're seeing wide-grade golden isms of 11 metres at 1 gram, with little high-grade hits of 1 metre at 11 and 1 metre at 3. Very similar situation to what's seen further south. So it's encouraging for us to keep on exploring in that area. And in the wider package, we've got 600 kilometres of ground to spare. Over 100 square kilometres of tenements, 100 square k's of target areas to produce, to look at. It's a large tenement package, but we're just going to work through it progressively. There's been very little historical exploration in the area. We're going to start with, we've been starting with soils and we're just progressively working through it. What we are targeting is something very similar to Rebecca. Large, low, it's not low to moderate grade, but large tonnage deposits, all in granites. Further to the south, we also have the Chifley deposit. It's a long strike from Ramelius's Lake Roe deposit on the Claypan fault zone. We've already done some soil sampling in the area, and we've got a 1 kilometre square gold anomaly to follow up, which we'll do some further work this year just to define it a bit better before drilling. And very briefly, we've got Mount Farmer project just near Mount Magnet here. We've had other people talking about rare earths. We've got lithium and rubidium in there as targets. We're still waiting for another tenement to be granted in the area, but there's also, so we're looking at that prospect there for rubidium, lithium, and also to the south, Spartan Resources also has some very high-grade gold deposits down there. So we've still got some work to do in that area as well. So that's our story as we sit today. We still remain a strong investment case, I believe. We believe we can still go forward at Ravensthorpe, and we're looking forward to success coming in that field. So thanks very much for your time.
Thank you, and thanks everyone for joining us. It's probably been a very long day for you all, so thank you. American West Metals, so I'll just point to a few pictures as we go through. So the important things to note in some of these pictures, we're copper, predominantly copper now. We do have other base metal assets as well, but our focus is on copper, our focus is on Storm, and given the copper run lately, you can see why. But look, this is what our traditional mineralisation looks like. Chalcocite and this in particular case is chalcopyrite, but very coarse grained and very high grade, and I'll talk to that. Like Chrissy mentioned, we do have 2 other assets other than Storm, and look, we're in Utah and Canada. The 2 West Desert is large zinc, indium, copper and silver skarn in Utah, very close to Bingham Canyon. It's also the USA's only deposit of indium. They import 100% of their indium from China, Bolivia, Sweden and Canada, I think. So it's very important from a strategic and critical metal space, but I won't talk about that too much. Come and see us afterwards for more details on that. And Copper Warriors, also copper, sediment-hosted copper, 15 k's from the 2nd largest copper mine in Utah, Lisbon Valley. So that's a very important project for us today, but we're obviously focused on Storm given the growth potential and the exciting news here. We put out our maiden resource this year. We've just begun exploration, drilling and geophysical activities, and we put out some news on that this morning. I won't touch on this. All I can say is I was going to actually erase and just put $10,000 a tonne, becoming a precious metal, but copper's certainly sought after. But I will make one point about this slide is that the need for going into new jurisdictions and some of our new neighbours in Nunavut, which I'll talk to, just show that some of the majors are really investing in these new jurisdictions, etc. Again, this picture speaks 1,000 words, and I don't have time for 1,000 words, so I'll talk to the picture. But look, we are far north Canada, but there's a few key things to point out here is that this is essentially a fly-in, fly-out operation. So as Australians, particularly West Australians, we get how that works. very easy to access. We have a camp that's 24/7 and we just fly in and turn it on at the start of the season. The other thing to note here is the vegetation or lack of it. There's not a tree, there's not a blade of grass. It's very benign from an environmental standpoint and point of view. And the other thing here is the fantastic relationship we have with the local community here. So this is members of the Resolute Hamlet community who visited us last summer. Actually, I won't go back, but one of those team members actually worked at the Polaris mine that was up in this part of the world. So very deep mining history here, which talks to this slide. So we're not alone up in that part of the world. There's 8 active mines in Northwest Territory and none of it at the moment. The key things to point out here is that a lot of the mines down, the gold and the diamond mines, they're very inland, and so they fly their product in and out, obviously. We're located in a historical mining district. The historical Polaris and Nanisivik mines operated for over 20 years. Polaris is one of Teck Cominco's most profitable mines during its day. They essentially did a DSO zinc and lead concentrate. This is on the Northwest Passage, which is essentially the Arctic Highway. This is ice-free in summer. We're on a deep water port. You can see the photo of one of the ships in the background there in the Northwest Passage. And ships are used to supply this whole region. So things don't come in on planes, smaller things do, but all the equipment, all the mining equipment, etc., comes in on ships and concentrate leaves. So ships come in and resupply the area, but they always leave empty. And so that's a really good backloading opportunity for us to send copper concentrate out on these empty ships. Oh, the other thing I forgot to mention here, which I talked to you before, is that there's a bit of a boom here, and particularly in M&A and land acquisition, and we've got some new neighbours, BHP Billiton, which are just to the north of us, about 700 kilometres. So you think we're far north, they're even further. But having worked for BHP, I can tell you 2 things, is that they won't go into the area unless they believe there's potential for a giant resource. So this is elephant country. And the other thing is they won't go there if they can't get the product to market. So they strongly believe that this is a jurisdiction that they're very comfortable in investing in. So Storm, what do we have there at the moment? So the maiden resource defined almost 18 million tonnes at 1.2% copper. So the key thing with this is in 4 deposits. This is a sedimentary hosted copper deposit, which is an important distinction. These generally range globally in the 1 to 3% copper range. 100% of our resource is open pittable and 100% of it is sulphide, so copper sulphide. The other thing to note is that the growth potential here is that there's a lot of holes that are not part of the main resource here that I'll talk to in a second, which we're hoping to upgrade and bring into the resource this year. This is one of the bigger deposits. You can see it's generally flat-lying, very amenable to open pit mining, like I was saying. And the 2 distinct colours here just really point out the 2 distinct grade ranges here. So we have a significant portion of the resource, over 60% is plus 1.5% copper, and then some lower grade material making up the bulk of this. But this pit was done on economics based on $3.75 copper price. Today it's $4.60. So you can see here that even at those subdued prices, that this is highly economic. You can see also here that it's open. Some of these drill holes on the edge here just indicate the kind of thicknesses and grades we're seeing on the margin. You can see some of those flat lines there where the ore body's cut off due to lack of data. And that's just exactly what we see. This is a map that highlights sort of the growth potential that we see, and certainly the information we put out this morning validates that information. So yellow and red dotted lines are where we have geophysical anomalies that we believe are strongly related to copper sulphide. Every electromagnetic anomaly that we've drilled to date has turned out to be a high-grade copper sulphide, so that's plus 2% in this case. And the information we put out this morning, the preliminary electromagnetic results, which need further modelling, but it's being done as we speak, points that the Thunder discovery that we made last year and the Lightning Ridge discovery probably extend over 1 kilometre to the west towards the Gap prospect there. So we've got over 10 kilometres of strike of these faults in the area, and most of them are undrilled, so massive upside potential. But that's the tip of the iceberg. Storm represents only about 5% of this belt, and so we have over 100 kilometres of strike of prospective copper horizon. We have the Tempest prospect last year, which we identified a zinc and copper gossan that's over 4 kilometres long, completely undrilled. We'll get the rig and the EM down there this year. We've also got tornado and blizzard areas which have copper sticking out of the ground, EM anomalies existing, and that's 10 kilometres down the road, identical geology to Storm. So we're very bullish on the exploration potential here. This is not a short-term thing. This is 10 to 20 years exploration life. But look, we're focused on getting a stage 1 mine up and running, and then obviously using that to explore the rest of the belt for the next 10 to 20 years. Now, we own 80% of Storm, I must point it out, and our joint venture partner, Aston Bay Holdings, Canadian company, own the other 20%. But we essentially, as a joint venture, own 100% of this project, which is 2,000 square kilometres. That's a bit of the model. I'll skip over that, but just going back to it, this is said hosted copper. So, you know, for people to make analogies, the closest analogies would be Botswana. So thinking of mod resources, Sandfire, Mateo deposit is a good example. It's lower grade, but has higher silver than us. There's the Kamoa coolers, obviously, this one end of the spectrum being the super giant deposits. DRC, Cooper Schiefer in Europe. So these are very usually occur in clusters, usually occur as big mining camps, and that's why we believe we're just on the edge of this. We actually drilled 4 deep holes last year, and while none hit economic thicknesses of mineralisation at that depth, all 4 holes hit copper sulphide at approximately 300 metres depth. So we believe that the cyclone deposit repeats at depth. One of those actually hit 2.7% copper at depth. So as a reminder, Kamoa, I think one of the original drilling intersections was 3 metres at 1.7% copper, and that obviously led on to be, you know, a significant deposit. So more work to do on that. But this is the unicorn of copper, and this is what we're really driven towards for us, and what we believe is going to be a significant step change for the project, and also for American West Metals. And that is, we've found that given the coarse nature of the mineralisation, it's dominantly chalcocite, so 80% copper, that we can simple beneficiation, crushing and screening, very similar to iron ore, very similar to lithium. So taking lithium from a 1.5% to a 6%, we've found that we can actually get this a DSO type copper product that we can ship directly out. So what that means is very high ESG credentials. There's no tailings dam, there's no reagents, very low footprint, essentially a rock quarry, essentially like building a road base, and we can get that to market. So we're working on that information now. There's various types of beneficiation and work. There's ore sorting, and then there's jigging and wet screening and DMS, etc. So working through a range of those to really optimise the grade that we want to send out, and also the throughput and also the mining schedules there. So this is the holy grail for us. This will, you know, very minimum capital requirements here and very high margin. So that's why we're driving towards this. We have floated this material as well, and it makes a 42% copper concentrate. But look, we're purely focused on this at the moment. So what's the rest of the year look like? Like I mentioned, we've started drilling, we've started the geophysics. So if anyone knows us, we put news out every couple of weeks in the season. There's lots of data to get through. We've got an extra drill rig on site this year, so we're going to have 4 rigs on site, 2 diamond rigs and 2 RC rigs. One of those is a tracked RC rig, which is the one that's on site at the moment. That's certainly going to accelerate the production here and the amount we can do. But 2 clear things it's very key to point out is we've got the resource expansion, so building on that 17.5 million tonnes. We believe they can go way north of that, obviously. And then there's the exploration phase. So we do have a large retail base in our stare, so we also want to get the sugar hits and the exploration success and show that this will grow to being a much broader project and a camp scale opportunity. So 2 clear things. Project development as well in the background. So what we don't talk about a lot, but we've begun the mining studies, begun the economic studies, and we're very advanced with the environmental work. So that's going to really front end load the permitting for us. We want to make sure we permit the right project. We could have done a PEA based on the existing mine, which is the 200,000 tonnes of copper. But we said, why? You know, this thing, if we can hopefully double this thing in the next year or 2, then that's the project that we want to permit. We want to make sure we get it right from day one. We don't want to be going back to the beginning and re-permitting things and starting the clock again. So very advanced in the economics, very advanced in the environmental work, the community liaison, and line of sight to getting those permits underway. So hopefully all that results in a fairly transformational change for us as a company, and you know, targeting copper resource multiples, obviously, and creating a catalyst for a company re-rating. So on that, I think they just summarised that in there. And happy to go early Yeah, thank you.
Thank you, everybody. I'm glad you could stick around to listen to Cobra, a fantastic uranium story we've got here for you today. Yeah, we're exploring 2 uranium projects in 2 world-class districts, being South Australia and Labrador in Canada. So as a quick summary, as I said, 2 high-grade uranium projects. So our Uramba uranium project is located in South Australia. It provides us 5,000 square kilometres of lands to explore and over 250 kilometres of paleo channels, highly prospective paleo channels that are known to host uranium that we're looking to explore this year. It also includes the Oban resource, which is a 4.6 million pound JORC compliant resource, a grade of 260 ppm. So that's a fantastic start to our exploration programs. It's a great building block on that 5,000 square kilometres. It's located in South Australia, so it's the jurisdiction that hosts Australia's 3 producing uranium mines. So it's the #1 jurisdiction to be operating for uranium in Australia. Last month, so a very recent acquisition, we acquired the RIU uranium project located in Labrador. It's approximately 50 kilometres to the west of Paladin's 127 million pound Michelin deposit, and it hosts approximately 9 prospects that have got rock chip assays returning greater than 1% uranium, and a couple of those are greater than 5% uranium. So it's a really, really high grade opportunity, and it was a low cost opportunity. I've paid $150,000 in cash and shares for a 12-month option over a prospect with these nine highly prospective targets. So both of these jurisdictions have got fantastic opportunity for the discovery of high-grade deposits, and I'll tell you a bit more about them as we go through. So Cobra's currently well funded. We've got $5.5 million in the bank, and that's going to give us a lot of power to go out and really hit the Uramba project pretty hard. Drilling's upcoming in June, and I'll tell you a bit more about that as we progress. But we're well funded to continue exploration. So the Uramba project is located in a world-class district. There's 2 producing ISR operations in the region, being the Beverley operation. The Beverley operation has a 165 million pound resource at over 2,700 ppm. It's been continuously producing for 20 years and produced 40 million pounds of uranium. So it's a fantastic place to be. Beverley had continued success. They've just continued to make new discoveries. As we can see here, the Beverley operation was a start, and then there was 4 Mile, and then another 4 Mile and another 4 Mile. There's just continuous exploration success in these paleo channels in South Australia. The next ISR operation is Honeymoon. Boss Energy has been a fantastic success story in the uranium industry over the last several years, and they've recently announced they've produced their first yellowcake. So a significant achievement by Boss, and it's really paving the way for all us junior exploration companies that are operating now in South Australia. We're located only 15 kilometres north of the Boss operation. So our 5,000 square kilometres in the same paleo channels that host Boss's 70 million pound deposits. So our main targets here are the Oban deposit, which is the 4.6 million pounds at 260 ppm, and the Mount John prospect. So the Oban deposit, as our reviews continue at Oban, we've been able to locate a consistent high grade, and our target here is to define high grade mineralisation that is potentially economic. And the resource that was previously calculated hasn't really factored in the high grade. They used a low cut-off and didn't really understand the mechanisms of the uranium mineralisation. And the work we're doing now to redefine the geological model has allowed us to plan drilling programs that will test these high grade trends that we're identifying that are more of an east-west orientation as opposed to the previously interpreted north-south orientation. And the current upcoming drill program will test these high-grade extensions, and we're optimistic that we're going to be able to find significant high-grade core to this deposit and then follow that high-grade core to expand it beyond the existing mineralisation. The significant intercepts such as 7.5 metres at 831, now these are economic intercepts, and that hole in particular doesn't have a single hole within 80 metres of it, and these things are required to be drilled out in very, very close spacing. And further, since this resource was calculated, there's been 170 additional holes completed by the previous operator, and many of them are very high grade. And that's delineated by this drill intersection, It shows that the continuous high grade is quite well connected and it can continue. So some of the mineralisation that we're seeing here, 2.15 metres at 2,200 ppm, that's a hole that was drilled post the calculation of the uranium resource. And in fact, 7 of the 10 holes on this drill intersection were drilled post calculation of the resource, as the previous operator were having success identifying the high grade, and that's where we want to continue. So the other prospect we really, really like is the Mount John prospect. It's located 4 kilometres north of Boss Energy's Jason deposit. Now, the Jason deposit is 10.7 million pounds at 790 ppm. It's currently not included in Boss Energy's mine plan, but it's only about 14 kilometres to the north. So Boss Energy are looking to make this a satellite operation, and so far their preliminary work indicates that mineralisation from here is potentially pipeable to their plant at Honeymoon. So our property is just 4 kilometres north of the Jason deposit, and this image here shows the paleo channel extending onto our property. It's been drilled previously, but scale can really get you on this project. This prospect is 20 kilometres from one side to the other, and some of these drill holes you can see, is there a pointer on here? This one. So these drill holes through here, the section across they're actually 800 metre spaced drill holes. So there's significant potential to make further discoveries in this paleo channel that further to the south holds 50 million pounds of uranium, being the Boss deposits and also Marmota's saffron deposit. So this area has fantastic potential to make significant discoveries of uranium mineralisation. And it's part of our plans for our upcoming drill program, which will start in June, is to hit this one pretty hard as well. So I'm an exploration geologist by trade. I've spent 20 years as an exploration geologist. I spent 10 years in uranium, and what I really like is exploration potential. We've got some resources and some walk-up targets at both Oban and Mount John, but what I really like is the potential to make discoveries that are currently unknown. And some of the prospects that exist on our property, pointer, up in this part of the project, have had very limited exploration. So a lot of them were discovered in the 1970s and maybe had a bit of work in the early 2000s, but they haven't had the amount of follow-up that is required to discover a deposit. We've had some pretty interesting results in this area. So 230 ppm, 180 ppm, they're all sniffs, proof of concept that these 250 kilometres of paleo channels that are in the Uramba project are actually potentially endowed with uranium mineralisation. So 5,000 square kilometres is a geologist's dream to be out there to make potential discoveries out here. So this is one of the new targets that we've been coming up as we continue to work through the data. It's a reinterpretation of the existing paleo channel. So the Uramba paleo channel comes through Jason and into Mount John. So this is the Jason deposit, and it comes into the Mount John and continues here. This is the known Uramba paleo channel that's highly endowed, over 50 million pounds of uranium resources. But we have a concept here that the uranium paleo channel actually splits at this topographic high, and there's a new paleo channel that we've identified in the gravity that continues for another 25 kilometres on this image, and it may even wind up and be the same paleo channel that hosts the Aban deposit. This 25 kilometres on the screen here has never ever had a drill hole. And it's just some of the stuff that we're finding as we go through the data and this 5,000 square kilometre package. And it just continues to give us new targets and new targets and new targets. And it's just something that's really, really exciting. And it's a fantastic way for us to add value through continued exploration success. So we're progressing our plans to drill in June this year. So we've submitted all of our requisite permits to the government. They're currently pending review. We've conducted our heritage survey last week. So we were able to clear 440 drill pads in a 4-day period with the traditional owners out there. So the traditional owners were very, very cooperative, very easy to work with. We actually picked this project up in January. We're able to get it into an agreement with the heritage group by the end of February, and then have them on the ground in early May to conduct a survey and clear 440 holes. So they've been a fantastic group to work with, and we've secured drilling contracts, we've secured logging contracts, employed all the staff to undertake drilling, and we'll be out there in June to get this underway. So in addition to our project in South Australia, we acquired a project in Canada. This was only actually acquired in April, so we've only had this for less than a month. As I mentioned earlier, it's located approximately, so this is the Michelin deposit. Paladin control this Michelin deposit. It's 127 million pounds of uranium, and just 50 kilometres to the west is our ground. And in this ground, we've been able to find 9 prospects that have contained grade greater than 1% uranium. No exploration has been undertaken out here since 2012, and it was an exceptionally low-cost acquisition. The 12-month option cost $150,000 in cash and shares, so a very low-cost acquisition, and to provide us an option over a high-grade uranium project in Elephant Country. So these are some of the results that are returning from our prospects. There's a couple that are returned over 5%, another one that's returned over 4%. And some of these prospects, in fact 3 of these prospects have never been drilled. So the limited exploration out here provides ample opportunity for the discovery of high-grade uranium deposits. We've progressed exploration plans out here as well. We've actually secured a team of 5 who are going to be out here for about 3 weeks in June. We'll be mapping these prospects as much as we can, sampling them, submitting them for assays, and trying to define targets for exploration drilling. It's a remote part of the world, so we want to be making sure that we're drilling our best targets first. So we'll spend quite a bit of time out here doing mapping. We'll probably progress to some geophysical surveys as well once we've completed initial mapping, rock chip sampling, and then we'll progress targets and prioritise and rank those for drilling in the future. So we've got an experienced board. Mike Haynes, Chairman of Uranium Companies, operating in the previous boom. Myself, 10 years in the uranium industry, and we recently employed in February Mark Cousins, a specialist uranium geologist based in Adelaide, very experienced in the South Australian uranium industry, knows how to get things done with the regulators and radiation plans, and knows all the drilling contractors and probe operators. So we've got a significant exploration team and management team with strong uranium experience. So why do we like uranium? I like to talk about my projects first, but uranium is pretty important to our concept. We're really bullish on the uranium price. We believe it's a very, very important part to the world's way to decarbonise and move to clean green energy. The uranium price has obviously had a successful run in the last 3 or 4 months, and this is based on some of those green energy targets, and 50 of the world's top GDP economies are now decided that they're assessing uranium and assessing nuclear power. There's 60 reactors under build, and there's plans for over another 115. So there's nuclear energy is not going away. Australians may be opposed to it. We're the one country in the top 50 GDP economies that is not assessing uranium at the moment. But it's the way of the future if we want to decarbonise, and we think that's going to be reflected in the uranium price over the next 5 to 10 years with strong forecasts. Yeah, if you'd like to learn more, I'm at booth 105, right at the front, or top of the stairs as you enter the main area. So feel free to swing on by and have a chat. And thanks very much for staying to the end to listen to what COBA has to offer.